Hi everybody, Mark Gouhin with RE/MAX Southern Shores. I'm joined by Roy Dunn with Homebridge Financial. How's it going, Roy?
Well, it's going very well, Mark. Thank you for having me here.
Glad you could be here. So many times I get asked by clients when I'm working with them is, it's like, what's the interest rate?
And that's, Mark, that's the question that I get as well. I get on the phone and the first question is, what is your interest rate? Well, my job is to dig a little bit deeper and find out, well, what is your interest rate? And there are many variables that come into play, kind of ingredients in the sauce of what is your interest rate. And we can do that very quickly, but we need to talk about what those variables are, and I do that every day with your buyers.
Okay. Well, in our market, there's single-family homes, there's condos, there's condo-tels, so I'm guessing the property type probably has something to do with
that is one of the biggies. Here we have condos, and within that sub category of condos, there are condo hotels, there's single family homes, there's duplexes and triplexes, and each of those property types is going to carry a different rate.
Okay, that makes sense. And then also in our market, sometimes it's going to be a vacation home, sometimes a primary home. I'm guessing that probably comes into the sauce as well.
It does, and it's a great place that we live that people want to have their vacation homes here. But there are three types of occupancy classifications. The primary residence, perhaps you're buying a home for yourself here, and perhaps you're buying a vacation home, a second home, or an investment property. And each of those carries a little bit different risk than the one before, and it might result in a slightly higher interest rate.
Okay, yeah, that makes perfect sense.
Well, that does make sense, and not everything in my business does, but that part does make sense, yes.
Okay. And then another part that's going to come into play, of course, is the borrower's credit score, right?
Well, that's true, and the credit report and the resulting credit score is kind of like a history lesson. This is the way it was described to me years ago. I couldn't say it better myself. It's a history lesson that describes a person's willingness to pay back debt. Simple as that. And the higher the credit score, lower the interest rate. That makes sense. And while someone may have a score that qualifies to buy a home, it may not result in the absolute lowest rate available in the market today. And that makes sense too.
Okay, absolutely. So you said there were a few other items?
Well, there are. Down payment, for example. Down payment equals equity. The amount that you put down on a home is going to equal the equity that you have in the property. The more equity you have, it could result in a slightly lower interest rate. And also the loan size. And these last two, number 5 and 6, are probably new to most of you. The loan size means that if you're borrowing a small amount, say $50,000 or $100,000, the interest rate might be slightly higher because all banks have to cover the fixed cost of doing a loan, and those costs can be the same whether you're borrowing $50,000 or $400,000. The appraisal, the processing work that the bank does. So sometimes it can result in a rate that's not much, but maybe a quarter of a point, maybe an eighth of a point higher than a larger loan amount.
Oh wow!
Yeah, and
I never realized that.
And we'll try this one on for size because this is the one nobody thinks about, and that is reserve assets. We'll call it. And these are funds that you have as a cushion. It's not money that anybody's going to take from you, but it's a show of financial strength. And this makes sense too, I think, in that if you have a substantial account in reserve after the closing, in case of a bad time or in case of an emergency, then that's a show of strength that can result in a slightly lower interest rate as well, as opposed to someone who has scraped to get the down payment and the closing costs, but boy, that's it. Well, you with your cushion paint a better financial picture than those without the cushion. Simple as that. So all of that's in the sauce. All of that goes into this mortgage rate. So when I get asked what's the interest rate, I can turn around and dig just a little bit deeper and find out what is your interest rate. And an easy way to do this, certainly not the only one, but I've got this quick, easy one-page application that you can fill out that we can include here as a link, and you can, with 2 minutes online, find out exactly what your interest rate is, and I'll see to that happens immediately.
So that's great. I guess we just learned that there's not just one blanket interest rate. A lot of variables come into play, and it's really great learning that with you, Roy, and I appreciate you coming by.
Thank you again, Mark.
All right, Mark Gouhin with RE/MAX Southern Shores, always happy to help with all your real estate needs, and Roy Dunn with Homebridge Financial.
Happy shopping.
Have a great day, everybody.